Hi, everyone, and welcome to another episode of MIA Podcast, where we answer the question, will Australian manufacturing ever return to the glory days of the 60s? And here to help us answer this question is Jackson Millan from Aureus Financial. Welcome, Jackson.
Thanks for joining us, mate. It's my pleasure to have this forum and chat about this and hopefully share some value.
I hope so. I'm sure you will. So for those who are listening, maybe not watching, Aureus is Aureus, which is Latin for gold. So Jackson, do you want to tell us a little bit around the history of your business and what you do for people as well?
Yes. So I've been in the wealth and business strategy space for over 15 years now. My parents were both business owners. My mum was a hairdresser. My dad was a tradie. He worked in lots of different trades and jumped around a lot, but he was a very, very hardworking man. But one of the things I kind of observed as a kid is that my parents were hard workers, but never had much to show for it. And what that led me to understand is that being very good at what you do does not guarantee your success. And being a great technical person, a great technician, and being a great financial manager or money manager are mutually exclusive. And you need to learn to master both if you are going to stand a chance at creating financial freedom. And over the course of my career, I've been able to help our clients amass over $2 billion in combined wealth and help hundreds of our clients be able to create financial freedom faster. And I'm very passionate about the business space because I believe that small business is one of the best wealth creation vehicles that we have. However, it needs to have the right financial model that is conducive to producing the financial results that we truly desire. It's why we get into business, right? We want freedom and flexibility. And I also believe it's one of the reasons why we've seen a huge reduction and downfall in the Australian manufacturing space is that many of the once very profitable and monopoly-based value propositions in manufacturing have fallen out of fad, have fallen out of fashion, have not kept up with the times. And as a result, have resulted in many businesses completely failing and folding and a lot of wealth being destroyed in the process. So I'm passionate about helping this space kind of rise from the ashes, get these financial models right, and really help these business owners turn their business profits into personal wealth so they can create financial freedom faster.
I love it. So if you are listening and you're interested in financial freedom, keep listening. So Jackson, tell me a bit about those those larger organizations that you feel have crumbled. What's a couple of examples you can share with the audience?
Yeah, so we're even seeing it right now, John. We're seeing there's been some businesses that have folded recently in Australia. There was a brewing company that's failed recently that was quite spectacular. There is also a retail fashion chain that has recently failed. And we can see that the times are starting to indicate these unsustainable business models that tend to come to light as we see the economy constrict, as we see capital start to contract, as we start to see consumer sentiment drop off. And even we've only got to look abroad, like this week that we're having this conversation. In the last week, we've seen 2 US banks fail. And this is concerning, like one of which is the second biggest banking collapse in history. And what this is indicating is that we are going from that very long bull market that, to be fair, we've had since the GFC, into a recessionary time period, into a correction, whatever you want to call it. These are all indicators of tough economic times. And what we've observed is that manufacturing is one of those spaces that often gets impacted the hardest because they've got long cash conversion cycles, they've got a lot of working capital tied up, they've a lot of sunk cost in their infrastructure. And we can use that brewery as a bit of a case study to be able to identify and see what impact improper planning and lack of liquidity can have in tough economic times. So I think it's really important for these businesses to know their numbers so they can navigate the times accordingly.
Yeah, I love this topic because for those who are regular listeners, you would know that one of the inspirations for this podcast is my dad. My dad was a CFO of a manufacturing company, and he was always able to predict about 2 years prior when a recession was going to happen. They built electric motors, And as sales start to drop off, it would be an early indicator that consumer sentiment. People are not buying pools; they don't buy pool pumps anymore, so therefore sales start to drop. That was the B2B side as well. And he would always, I remember him coming to the kitchen table and be like, "I reckon we have a recession in a couple of years." And that was, the last one would have been the recession we had to have. But he was always able to have that about 2-year window just to, as a financial controller, to be able to, batten down the hatches and do a bit of preparation for that as well. Unfortunately, they copped it about 2 years before it actually happened. But you're right. They were able to he was able to steer the company in a way that they were able to survive. So I'd be really curious, and we've jumped straight into the topics here, which is great. I'd be really curious to just to hear what your advice is around a company. We know the economy is tightening. The world economy is tightening. Whether it happens or whether it goes into recession or not, I don't think it's overly relevant. But what would you say, some advice around business owners right now? What would you be doing if you were in their shoes?
Yeah, it's really interesting, John. One of my first mentors who was managed a multi-billion-dollar portfolio, and he said businesses are run by two types of people. They're run by marketers or they're run by accountants. And marketers are fantastic in bull markets where there's free-flowing capital, there's great consumer sentiment, when there is an abundance of opportunity. And these are the times where we need to scale. And marketing and sales is what scales these businesses. And on the flip side, when times get tough, you want a business that's being run by an accountant. Because I'm sure you can attest, John. I'm sure your dad was a very shrewd operator, and particularly through those tough times, was able to make some really tough decisions that guided that business through those tough times. And if it wasn't for those tough decisions, the business may have inevitably failed. And this is what we see. We see the wrong type of person running the business at the wrong time. And when we're talking about the small business space, and this is businesses that are below $50 million, that responsibility is typically held by one person or a number of people who are the founders, who aren't necessarily marketers or accountants. They're potentially having to be both. They're wearing multiple hats. And the problem here is because of the benefit of kind of 20/20 vision in hindsight, and also the rose-tinted glasses in foresight, they're wearing the wrong hat at the wrong time. And what we've got to realize is, much like what you just mentioned with your dad, money moves slow, and we need to be able to predict things out with a reasonable enough runway, because if you get a recession that slaps you in the face with no forewarning, then your business may not be in a financial position to be able to navigate those tough times. So one of the things that we've been working on with a lot of our clients, which are all shapes and sizes of all different industries, both services and product, is the implementation of operating rules. The idea is that if we have operating rules, we have objective frameworks in which we make decisions, they can protect ourselves from ourselves. Because one of the biggest risks we've seen, and it started to come to light with all of these businesses that are failing, is that they did not foresee the punch that knocked them out. Because that's the punch that often knocks them out, right? And they did not have the balance sheet or the liquidity or working capital to a position where it needed to be to allow them to turn the ship in time to miss the iceberg. And what this comes down to is coming up with some basic pass or fail rules that determine one of two things, John. Determining whether your business is in a position to go for growth, or whether it's in a position where it should be focusing on optimization. So let me give you some examples here. Some examples that we use in our own business. We're a professional services business, and we help our clients with their profit and their wealth. So we focus on three fundamental rules. One, we focus on maintaining an operating profit of 30% or more. Because with a 30% operating profit, particularly in a high inflation environment, if our cost to serve increases by 10%, we still have a healthy margin. We've got enough meat on the bone to be able to compensate for short-term fluctuations. The second thing we do is we've set a target for cash to operating expenses in our business. And we aim for that cash to expenses to be 3 to 6 months of our expenses. Now, depending on where that is, that determines what we do with surplus cash flow. So if the cash to operating expenses is less than 3 months, there are no dividend distributions. All of that money has to be accumulated in the business. if we are between 3 and 6 months, we distribute 50% of our profit to shareholders. And if our cash to expenses is more than 6 months, we distribute 100% of our profits to shareholders, because there's very few businesses that need to hold more than 6 times cash to expenses. And then our last metric that we track is our recurring revenue to expenses, or in other words, our existing clients to new clients. And by understanding the reliance we have on new clients and opportunities coming in the door to be able to achieve our other objectives, it indicates whether we have to play defense or that we should be playing offense. So by having these really objective pass or fail rules, it allows us to minimize the risks that we take along the way, and also focus on the strategies that are going to get us to where we want to go, depending on those financial symptoms.
That's like incredibly sound advice there, and I love this whole concept of the rules are there to save us from ourselves. It reminds me way back when I first started my own business. For those of you who don't know, I went from web technology into life coaching for a couple of years, and then sort of jumped back out into web and marketing. But that was essentially my first go at running a business. And my business coach sat with me and he said, "How much have you got in your savings?" And I said, "Oh, I've got about 6 months." And he said, "All right, we're going to lock it away into a term deposit." And it scared the crap out of me. I wanted to punch him in the face, because there went my comfort zone. And I remember going to the bank, and I expected the bank teller to be like, "Oh, your business coach is a bit harsh." And he was like, "Great idea. Let's do it right now." But that saved me from myself. Because he knew that I would have just probably chipped away at that 6 months worth of savings, and then I probably would have got off my ass and really, really grew my business. But these are why there's rules in place, because we never know our own behaviors until pressure's put on, and by then it's probably a bit too late. So, wise advice, I say.
I agree, mate. And I think this is the interesting part, right? We can try and be as objective as possible, but sometimes we're subjective creatures. We look at the world, we look at our business, we look at the economy with different lenses, right? We can't possibly absorb and filter all of the information. It would be far too overwhelming, because there's millions of pieces of data that we're trying to filter in every single moment of the day. So we've got to realize that by definition, we are creatures of subjective input and analysis. So the only way that we can ever stand a chance of making objective, forward-facing, outcome-based decisions is to have these rules. Whether you're religious or not, the role of the 10 Commandments, right? From a philosophical standpoint, it's all about creating this lens or this compass, this moral compass for people to make good decisions as human beings. And we can all see the role that that plays. But how many businesses have the equivalent of 10 Commandments in their own business, or even in their lives, John?
Yeah, absolutely. And I think you're right. Like, it's one, you've got to have a good resource in your business to be able to help you with that, whether that be a good accountant, a good CFO, whatever it might be. But you've got to have someone that can maintain the rules as well. And I think that's where that sort of role comes into play really well. How many times you see the CFO and the CEO butting heads because the CFO just wants, the CEO just wants to grow the business. The CFO is typically cautious, but I think one of the things that I've found around having rules within a business or in your life as well, it also gives you freedom, because you know where your constraints are, when your boundaries are. If you've got, look at a kid who's got no boundaries, they just run around like a crazy thing, but they're looking for, they're trying to get boundaries. That's why they push. So we're getting philosophical conversation here. I like it. A bit different how we normally run.
This is the important part, John, that I think many people, when they start talking about the numbers, and as everyone could probably see if you're watching the video version of this, I don't look like your typical finance guy. I approach numbers from a much more understandable and enjoyable way, because it should be an enjoyable thing. It's the lifeblood to your ability to create financial freedom and your ability to sustain a viable business for the future. And what we need to understand is that money is often the byproduct of other things that happen. And therefore, it's a great way for us to measure the outcome of the decisions that we have made, or potentially the decisions that we haven't made. But that's not necessarily where the answers to those outcomes are. It's just really a way for us to validate the successes or lack thereof. So then we've actually got to chunk it back and reverse engineer it. And when we can reverse engineer it, we can make far more confident decisions that give us peace of mind and certainty to the best of our ability around those outcomes. And I feel that's as critical for the manufacturing industry, to be fair, than most other industries, because of that cash conversion cycle, which really leads us to the next thing. The demise of many manufacturing businesses have largely come down to their lack of understanding of cash conversion cycle. This is the idea of how we get materials or raw materials into orders, into delivering on those orders, to getting cash in the bank. And there's typically always a lag. And the interesting thing about that lag, John, is that the lag only matters the first time you go through it. So when you bootstrap a business from the beginning, let's say it takes you 5 months for your cash conversion cycle. But once you get over that hump, it only ever hurts you again if there is a lull in your pipeline. So let's say, for example, that December, January is always quiet, then that's going to hit you in kind of May, June. And there's not much you can do about that other than prepare your balance sheet for the fluctuations in terms of your P&L. And I think this is where many business owners do not take the time to understand their balance sheet to be able to better run their business and understand that cash conversion cycle, because really it means the difference between their survival or otherwise demise.
Yeah, that's it is incredibly important. That whole concept of for a lot of manufacturing, it does shut down in that sort of December, January period. I remember we were the opposite. My dad's company. I had the joy of working there over the Christmas break because everyone had pools and all that sort of stuff. So everyone needed, electric motor sales went through the roof probably about November because, or probably a bit earlier because, a lot of places would buy stock early and then, so they can ship, etc. But I love this whole concept of understanding your balance sheet. I think there's a lot of businesses owners there, and I've been guilty of this as well. You look at your bank balance, there's money in the bank. It's like great things, money wise are okay, and then you focus on other things in your business because you put that in a compartment. I don't have to worry about that. But the second you take your eye off the strategic side, that's when it bites you in the ass. And that's where a good financial layer consultants will tell you those early warnings and how you have to prepare. And would you? Us as business owners, we have to have an understanding of a balance sheet. But
Yes.
Would you say? From our end, we rely on our CFO, external people to give us the right advice as well. Where do you see the balance in sort of how much do you need to know as a business owner versus having someone else give you advice?
Yeah, here's the challenge, right, John? I think the majority of business owners don't label themselves as being financial folks, right? And they would much prefer to abdicate that responsibility to somebody who really lives and breathes it. And for a very long time, which might come as a little bit of a surprise, I was that kind of person as well. Until I come to realize that I was constantly being let down by the people around me. And the reason for it is because no one will ever love your money as much as you do. And much like in your business, as a business owner, you cannot expect your staff to put in more effort and be more passionate about your business than you are. It's just an unrealistic expectation. So with that being said, and having that epiphany moment myself, I'm like, okay, well, what is the least amount that I need to know to responsibly manage my money in my business and make really good financial decisions? And further to that, get more value from the people that I've surrounded myself with. Because the biggest complaint that I see, John, from business owners the world around, and they're like, well, my accountant speaks another language. I can't understand exactly what they're telling me. I kind of like smile and nod and glaze over because I don't want to appear as an idiot that I don't understand them. And should I? And it becomes this really weird dynamic in the relationship. And accountants are fantastic, but they are financial folks. Like, they speak in ones and zeros. So your ability to extract value from them is really about how do you kind of meet them at a certain level where you can ask the right questions. So let's simplify this for a second here, John. We've got to understand that a set of financials is like a book. Your profit and loss is chapter 1. And much like any book, if you just read the first chapter of that book, you're not going to get to the punchline. Like, you're probably not even going to get to that kind of the crux of the story to understand exactly what's going on. It's just laying the foundations. And the exact same thing happens in a business. That your profit and loss, based on most businesses operating on an accruals standpoint, is not actually what's happening in cash, which is why most business owners complain, hey, my P&L looks one way and my bank account looks another. What the hell is going on? And the reason is you haven't read the rest of the book. People get overwhelmed by the balance sheet because they're not quite sure what it means. And it's quite simple. So the balance sheet is the chapter 2. And it's where the real crux of the story is told. And really what it's telling us is that the 3 main functions is assets, liabilities, and equity. Now, let's not worry about the equity for a moment. Let's focus on the assets and liabilities. So we need to define assets by what's called current assets, which are assets that you are likely to realize in 12 months or less. So this is cash in your bank. This is accounts receivable, invoices that haven't been paid yet. It might be loans that you've made to directors that are going to be paid back on a short-term basis. All of these are current assets or short-term assets. Non-current assets are assets that are likely going to be held for more than 12 months. So it's your plant, it's your equipment, it's your sunk costs into setting up your facilities. All of these things are going to form part of your non-current assets. And to be fair, they're not really what we focus a lot of time and attention on until we get the current assets in order. Then on the flip side, we've got current and non-current liabilities. So liabilities you've got to pay in 12 months or less, or liabilities that are longer term. The biggest issue we see in most businesses, particularly manufacturing businesses, is the relationship between current assets and current liabilities. So a little simple tip for everyone who's listening or watching to this is go and work out what we call your current ratio. And your current ratio is the ratio of your current assets to your current liabilities. As a general rule of thumb, your current ratio should be 2 times current assets to 1 times current liabilities. Meaning that you should have 2 times the amount of cash in the bank and invoices that you are owed to your short-term liabilities like ATO debts or your super payments or PAYG or whatever that might be. Meaning that if all of your suppliers and everyone called in your bills, you would still have double that amount of money sitting in your bank account or in outstanding invoices. So it's a measure of liquidity. And that's really the crux of what we need to know, John. It's pretty simple, right?
Nice and easy. I like it. I've spent hours poring over YouTube trying to understand this stuff. That's a nice, easy explanation. I like it. Look, let's switch gears slightly. Where do you see the state of the economy? Let's look at the Australian economy, world economy, and then manufacturing, because manufacturing's had as a percentage of GDP, we've it's been exciting over the last couple of years. We've seen it trend upwards for the first time in God knows how long. Is this sustainable, or is this like just a quick injection? If you can answer all those 3 questions, if you remember them all.
Definitely can, yes. So let's talk big picture macro in terms of global economy and where we are at right now. History repeats itself, right? And Winston Churchill famously said, those who fail to learn from history are bound to repeat it. And what's interesting is financial markets always go in cycles, and it's largely because of people's greed. And greed is not a bad thing, right? We all have some level of greed. We want to amass more wealth. We want to make more money than we have done in the past. And sometimes common sense goes out of the window. And we've seen not a lot of common sense in financial markets, particularly through COVID. Like, who would have thought in a crisis like that equity markets and basically businesses the world around would absolutely explode, and in many cases have overshot the mark and needed to contract in order to come back to some level of normal. So I think at a global scale, there's 2 evils here. There is recession and there's inflation. And a recession is the lesser of 2 evils because inflation is good for no one. It's basically a universal tax that affects everyone across the board, and it's not a good thing. So it's my view that most global superpowers are trying to drive economies into a recession in order to curb inflation. Now, Australia is in a really good position. We have a comparatively strong balance sheet. We have good GDP. We have almost full employment. We have a relatively strong economy overall. So I feel that very similar to the GFC, that we will navigate through these tough times, whatever they may look like, relatively unscathed. Not completely unscathed, but relatively speaking. Now, if we talk a little bit more micro around business, and we need to understand that from a financial model standpoint, there are basically three kinds of businesses. There are businesses that operate based on utility. There are businesses that operate based on brand equity. And there are businesses that operate on price. And bringing this full circle to explain, the reason why manufacturing went out of the window is because Australian manufacturing was far too expensive, and there were better offshore options that provided the same amount of utility at a lower cost. And the problem has been with the value proposition of most manufacturing going back to the kind of the golden days of the 60s and kind of into the 70s, is that it was very much based on that price-based equation. There was not a lot of brand there. There was not a lot of illustration of additional utility. This is coming full circle because we've seen so many businesses who have been sourcing from China and doing all of these kinds of things realize that price is not the most important thing when your business can be completely taken away from you because of factors outside of your control. So I personally believe that from a financial standpoint, Australia is, and that manufacturing space in Australia is able to provide a lot more utility backed by brand equity of that kind of trusted quality of the known commodity. And I believe that there's going to be another wind of manufacturing growth in Australia, which is fantastic. And the government is incentivizing. There's lots of grants and things that are coming in this way to get more money into this space. So I think it's super exciting. However, we need to realize that the cost of doing manufacturing in Australia is quite high. So having the right financial model, the right liquidity and working capital is going to be critical to your success, to getting to that certain economy of scale to be able to ride that wave of growth.
Yeah, and I think, what you're saying, pretty much most of us at some point, agreeing with. And I think, there is definitely there's a drive worldwide for quality, and that's, Australia is perfectly placed for that. There's this whole sustainability discussion that's going around the world at the moment, where let's make products that are going to last more than 20 seconds.
Yes.
And Australia is perfectly positioned for that as well. And you're right. One of our big challenges is how we position ourselves from a financial perspective. I think one of the big challenges this manufacturing is starting to face right now is rising energy costs, which is it's impacting people, and I don't know. I mean, I don't know many people who would have seen that coming. That was a bit of a curveball. And then there's the other weird ones, the lag from COVID. So rising cost of transport, lack of materials, et cetera, et cetera. So, but I think, we do have a really, really good opportunity at the moment. Within the country itself and to export. I'm really interested in our export. When I was younger, our terms of trade was primarily positive. It's teetered over the years, but it was definitely back then. I like to see that really flip. So we've got manufacturing holding the fort there.
Yeah, and I think there's a great opportunity, right? And look, I think what is important for these businesses is don't get caught up in the potential for growth. Focus on growing smart, because there is ultimately a scale tax that many businesses encounter by growing too quickly and then having to try and solve these problems as they're trying to grow. And this is about trying to create a sustainable trajectory. Like the best businesses that have been able to survive decades and longer have been businesses that focus on that steady and sustainable growth. They're not typically the fastest growing businesses, but they're the ones that have a sustainable value proposition. They focus on those core fundamentals. They make sure that they don't overextend themselves, and they take measurable asymmetrical risks when they possibly can. And ultimately, that's where manufacturing in Australia needs to position itself, because swinging for the fences, we've seen it in some cases work, but in many cases not. And the consequences of getting it wrong are far greater because of the cost of capital, because of the cost of doing business, and also because of the economic times that we are likely going to see ourselves in for the next couple of years. There is not as much free-flowing capital in the economy or investment to be able to raise capital if you do overextend yourself. So you've got to be prepared to play it safe.
Yes. My understanding from people I've spoken to is, at least locally anyway, the cash reserves of our banks have only got, a couple of years before they start to, essentially they're borrowing at 0% interest. They're going to start drying up in a couple of years or so. Is that a fair call?
Yeah, look, and there's a lot of factors here, right? I think probably the biggest systemic issue that is on the horizon that we've seen with the collapse of even these two US banks is mainly sentiment driven. Like the banking business model is about lending out more money than what they have, and obviously at a premium much higher than what they've borrowed it for. And this is how banks have got money into the economy for over 100 years, right? It's an integral part of the financial system, and it works incredibly well. However, it only works on the premise that there is sentiment for people to keep their money in the bank and not all try and withdraw it at once. So that is where we've seen these two banks collapse, is where the fear of their customers in terms of the sustainability of that bank has fueled this mass exodus, and at a rate that we've never seen before, because prior people had to go into the branch to get their money, and now they can do it online in seconds. So we're seeing these these monstrous collapses of enterprises that had billions of dollars of assets under management. I do have some level of confidence in Australia because of the state of the economy. And how we do track business and consumer sentiment on a regular basis, and sentiment here is much stronger than it is in the rest of the world. However, 12 interest rate increases in a row don't necessarily help the cause, so anything can happen.
And if you are listening, was it? Yeah, it would have been last week, wouldn't it? We just had a 0.25 official, another increment in official cash rate. So it'd be interesting to see where this all goes. I mean, I think when we met face to face last time, we had a brief chat about Australian mining. That got us out of the GFC. Everything I know from Australian mining is that it's doing really well. I've got family out at Broken Hill who say that there was 3 mines open up recently. There's a gold mine and a couple of others as well. You've got all the push for lithium, etc. So Australian mining's still in a strong position. So we'll see if that helps hold up the economy again. So it's an interesting balance between sustainability and mining, but we'll see where that goes.
That's it, mate. Well, look, it's one of those things. It's everything has its place in the economy, and we've just got to take it for what it is and do our part. Interesting times to come.
Yes, absolutely. Look, we're probably getting at the point where it's towards the end of the podcast itself. So I know we've only just tapped the pinnacle of the very peak of what your capabilities and your knowledge. Firstly, how do people get to find out more about you and your business, and how you can help them as well?
Yes. So look, we've realised that there are so many businesses and business owners at different stages of their journey. Like, we've had the pleasure of working with clients from just startup up to $50 million, $100 million businesses. And we realise that everyone's running their own race. And there's also this pressure of keeping up with the Joneses. And not many people have an objective way of measuring their own financial success and knowing what is the next right thing for them to work on. So for this reason, we've developed a 40-point financial performance scorecard. It's basically the top 40 things that we've identified get in the way for most business owners creating financial freedom, irrespective of their their industry or where they are in their business. So by completing that, it allows you to work out where are the low-hanging fruit in your particular situation, and then identify the best ways for you to improve that. The scary thing, John, is we've done this with thousands of business owners the world around, and the average score is about 18 out of 40. Which means most business owners are below average financially. So guys, if you've liked anything we've spoken about, feel free to jump on to wealthhealthcheck.com.au. That's wealthhealthcheck.com.au. Complete the scorecard, see how well you do, get a stack of resources of how you can improve that score. And of course, if you want to have a conversation off the back end of how we can help you improve your profit, maximize your cash flow, build more personal wealth, we'd love to support. All the details will be on that link.
Yes, and I would say do it. And obviously we value your advice, Jackson, but I'm just going to put my layer in here as well. So we had coffee a couple of weeks ago, and one of the things that impressed me most about how you operate, Jackson, is that there's a hugely strategic layer. It's not ticking boxes. It's not, I do this for a living and I get up and I tick boxes and I go back to bed. All you're thinking is strategic. There's a lot of different layers. There's a wealth of knowledge there, and it's like this whole everything encompasses into a decision of how you're gonna roll out your finances, which is a breath of fresh air, in my opinion.
I appreciate that, mate. Thank you very much.
That's why we have guests like yourself on the show, because from my perspective, I hope tell me if I'm wrong, but you're adding a huge amount of value to our listeners as well, and a lot of potential there as well. We both agree, Jackson, that Australian manufacturing has been the backbone of Australian economy. It probably won't ever be like the way it was in the 60s, but I'll get to answer that in a second. But to have layers like being able to employ people who just aren't fit for sitting in an office all day, to be able to get out there and get a trade, and be proud of their job, to be able to have Australian manufacturing to some extent beat its chest overseas again, and just say how proud we are of the quality products that we make, and our ingenuity as well. Being able to come up with some fantastic manufacturing ideas, things that we've pushed out of Australia, not just the Hills Hoist. There's a lot more than that. Let's get that conversation around the world as well.
I agree, mate. I think there's been so many great brands, so many great products that have been essentially born from Australian minds, and there's so much knowledge that has been lost because of that drop off in manufacturing, and it's really sad, because it is one of those things that it gets passed on from that generation to generation, from a tradesperson to an apprentice, and there's no other way to pass that on. And the amount of generational knowledge that has been lost because of this lull from the kind of the 60s and 70s until now is a huge missed opportunity, in my opinion. But now there's hopefully a chance for a second wave, and a more sustainable wave that can persevere through any economic time.
Yes, and I love this conversation, because someone we will have on as a guest probably in a month or two from now, his dad was a boilermaker. Exactly that sort of sentiment. It was like back in those days, boilermakers were tripping over each other, but you can't find them anymore now. And it's, in my mind, it's like here's a skill set that if we don't, there's this critical crossover of knowledge, which is just what you said. Like, if we don't capture it in time, it's going to go, and we're going to have to somehow build up this knowledge from scratch and start all over again. And that's going to add to costs and quality. It's going to have a roll-on effect as well. So let's keep the momentum of manufacturing going. So I think my final question, in your opinion, will Australian manufacturing ever return to the glory days of the 60s?
I really think it will. And I think now's the time, right? Like, with the amount of innovation that's happening in the technology space, this transition from human capital to basically this machine capital, and then using really great technicians who are able to operate, improve, optimize those machines. That's going to be the new wave of manufacturing. We're seeing the same thing happen in the US, of the big transition from outsourcing to China to then bringing it back on shore, leveraging the power of automation and technology. And look, the technology just wasn't there in past time periods. So I personally think where this is going to come to its own is as we start getting into this next bull cycle, where the capital starts flowing again, people start looking for more investment opportunity. And I think this time people are going to be looking for more local investment opportunity. And I think that's really where the opportunities are going to exist for manufacturing to get that second wind.
Good. So positive outlook there. I like it. So thank you so much again, Jackson. I say this to every single one of our guests because I just love having them on. We could have talked for hours and hours and hours. Unfortunately, we have to stop it there. So I do absolutely highly advise you to go to the website. If you just want to repeat that one again.
Yep, so it's wealthhealthcheck.com.au. So wealthhealthcheck.com.au.
Yep, and if you're unsure about how things are going in your business, just go to their website, check it out, have a chat to Jackson if you can, just to get a second opinion and just off that strategic brain, and let's get manufacturing profitable and growing again. So thank you again, Jackson.
My pleasure, mate.